Good morning, this is Tom Vinelord from Wall Street Value. Today we're going over tip number 4 on the investment checklist, net profit margins. So expressed as a percentage, the net profit margins show how much of each dollar collected by a company as revenue translates into profit. So what we want to do is we want to take the net profit and divide it by the total revenue, and that gives us our net profit margin. Now we don't need to do the calculation. I'll show you in a moment where we can get this information on Morningstar.com and Yahoo Finance. To make this illustration pretty easy to understand, let's assume we have a basic business. We're operating a lemonade stand. This week we make $10 in lemonade sales. We don't get to keep that $10 because some of that money has to go towards buying supplies. We're going to spend $8 to buy cups, make some signs, maybe some advertisements, and buy the supplies to make the lemonade. So that gives us $2 that's left over. That's our profit. We take the $2 and divide it by the $10 in the total revenue we brought in. That gives us a net profit margin of 20%. We want companies that get to keep as much of the money that they bring in. And the money they keep is profit, and the money they don't keep goes towards expenses and bills and any other costs associated with running the business. This metric should be used to compare the company's competition. What it's not used for is to compare one industry to another. For example, if we take a look at the grocery industry, they have very low net profit margins because there's a lot of costs associated with that business. They have to fill the stores with tons and tons of inventory. They have these big buildings they need to lease or rent or buy. And if you compare that to a services-oriented industry, such as insurance or investment houses, there's no inventory there. They're going to have a higher net profit margin compared to a grocery. But what this metric is very good for is comparing the company that you're taking a look at right now and comparing how good they are at keeping the profit compared to the others within the same industry. The net profit margin is higher than the competition. It could be a sign of three things, all of which are very important. So the first, it's a sign that the company could be a leader within the industry. Number two, it could be a sign that the management team is doing an effective job and a very efficient job running the business. They're bringing in money, they're keeping expenses low, and they have money left over to grow the business or to pay out dividends. And third, probably most important, is if they're consistently achieving higher net profit margins year after year, it could be a sign there's something very special about that business. And Warren Buffett would call that as having a moat or a durable competitive advantage. And we'll get to more on that in another video. But any company can have a stellar year and post great net profit margins one time. However, the companies that are able to post higher margins year after year after year compared to their peers shows they have some type of competitive advantage. So where can we find this information? If you go to Yahoo Finance, go to the top of the screen there. It says search for news, symbols, or companies. So you'll want to enter in the ticker symbol of the stock, and that'll bring you to the summary page. And if you go over a couple spots there where it says statistics, click on statistics, scroll down to the bottom of the page, and you'll see profit margin. Another place you can find this is Morningstar.com. Again, type in the ticker symbol. I use Microsoft here in this example. And what you want to do is go down towards the middle of the page, click on key ratios, and you'll find that right there, net profit margin. TTM stands for the trailing 12 months. So their net profit margins over the last 12 months has been 23.89. So very good, but what you want to do is compare that to their other competitors. So it looks pretty good, but not if everyone else is posting net profit margins of 30%. Now, if you want to look at all the competitors side by side and have a real easy way to analyze this, you need to pay some money. So one of the best resources I like for doing this is go to gurufocus.com. I think it's $300 a year, and you type in the ticker symbol of the company. You can compare every single one of their competitors, and you see side by side who has the highest net profit margin. So that's it for tip number 4. One last thing before I sign off here, I want to let you guys know we are doing a 16-week stock investing and options training course. We're going to be spending 1 hour per week together, and that's going to be in January. If you want some information on this, if you're interested, shoot me an email, tom@wallstreetvalue.com. And that's it for now. I'll talk to you guys soon. Take care.